Have to hold some gold and silver, though, as diversification. I think that's the key, and I'm big in keeping money out of the financial system as best I can. You know, whether you own physical real estate, whether you own gold and silver, whether you have collectibles, whether you invest offshore and own, assets in other places other than the U.S., you have to do something. Cash is very important, too, keeping a stockhold of cash around just in case something happens. So, I think you have to have something in the markets, obviously, and you just can't be totally out, but I think you have to be realistic. So gold and silver, part and parcel to that.
Silver investors could make a fortune. Billionaire Eric Sprott and other top gold analysts predict that silver will dramatically outperform the yellow metal. In order to maximize your exposure to silver, consider shares of Golden Arrow Resources, trading on the TSX Venture under GRG and the US as GARWF, where insiders have accumulated 50% of the company, and billion-dollar giant Silver Standard Resources has taken an 8% stake in the company. This company has 250 million ounces of silver resources and is headed up by the one man who's responsible for the largest silver deposit discovery in history. Learn more at crushthestreet.com/silver100.
Hello, everyone, and welcome in to crushthestreet.com. Once again, I am Kenneth Amaduri, and I'm joined today with a new guest, Mark Leibovit, Chief Market Strategist for VRTrader.com, straight out of Arizona. He's a market expert, and he's going to help us make some sense of these global economic changes. Mark, thanks for coming on the show with me today.
Thanks for having me, Kenneth. Sure, thanks again.
Mark, you're a first-time guest here at crushthestreet.com, and we welcome guests to come on and help us make some sense of what is going on globally, with this changing economic environment. And I want to just start you off here with an open mic to let us get to know you and to hear about what you see unfolding in the economy in 2016.
Okay, well, I'm more of a market technician and contrarian and cyclical forecaster than an economist, but it's clear that the world is suffering from a deflationary spiral, and we have central bankers that have run amok in terms of money printing and, driving interest rates in some places down to negative territory. So, despite the rosy picture we may hear from financial television and economists, things really aren't that great out there, and we just pretty much have central banks, covering up their tracks by just printing money. Japan is run amok. China, even to the extent of buying back shares in the open market to support the markets. That's been going on here in the U.S. for years. Most financial columnists don't talk about it, but as you know, we do have the plunge protection team, the working group of financial markets that was signed into law by Ronald Reagan back in 1988. So we have very active central bankers. Essentially, the term that I use in my newsletter is rigging the markets. The markets are rigged. We just see, unfortunately, it's not a free market or free economies as we would hope to see. It's just a whole different world out there. So the question is, how long can the rigging go on? And they've been successful, I suppose, up to this point. But at some point, it's going to blow up. So we just have to take it a day at a time. But I tend to want to be a little bit more defensive than that, and not really have all your money exposed in the markets, and be careful, because a lot of things could happen very quickly and change quickly out there. I mean, we can talk about a lot of dire scenarios, in terms of government intervention and so forth, or there's a lot of scenarios we can discuss. But just as a general introductory statement, I just think that you got to watch what's happening on an international scale, and it's not really, and we're not even talking terrorism or anything like that. We're just talking in terms of the pure financial situation. So with the debt where it is here in the U.S. and with the ongoing intervention on the part of the central bankers, the question is, where will this all end up? And I just can't see it ending very well unless some miracle technology or some miracle event occurs to get the economy's back on track in terms of normal supply and demand. So that's where we're at. We're just going to have to take a day at a time.
What is the significance of what we're seeing in Europe right now with the banks in Europe just collapsing? The largest bank in Germany right now looking like the chart we saw with Lehman Brothers in 2008, Italian banks just collapsing. And what is this signifying to you, Mark?
Well, that's related to the oil crisis and the fact that we've seen oil down. In fact, it's down again as we're making this recording. Deutsche Bank, in particular, had a lot of loans in that sector, and unfortunately, it's coming to roost for them right now. And I think that's part and parcel of the problem. Yeah, collapse of the Italian bank and the German bank, is not a favorable event, but then, you've got the central bank there. Are they willing and ready to bail them out? Will the Federal Reserve here in the U.S. step in and help over there? We've heard back in the 2007, 2009 period, actually 2008, 2009, when we had our financial crisis here, when Bloomberg sued under the Freedom of Information Act, the Federal Reserve, to find out what was going on. We found out that Bernanke was actually bailing out some European banks secretly, not telling us about it. At the same time, we're fighting here in the U.S. over a General Motors bailout for about $35 billion, but meanwhile, he's sending billions overseas secretly. So that could happen. We could end up bailing out the banks there like we bailed out the banks here, I suppose, if it gets bad enough. But, is that really a solution? And, will it just be a Band-Aid? And ultimately, the result just can't be a positive one, I suppose, unless everybody doesn't care.
Yeah.
We just have a scenario where it's like, who cares if central bankers are manipulating the stock market? You come out with, like I mentioned a few minutes ago, China that prevents traders from shorting stocks or goes into the open market and buys shares and supports them. We know in Europe now the central bank is buying corporate bonds. So the government's in the markets, and people just sort of ignore it. Okay, that's okay. Central banks can buy stocks, support the stock market, and I guess as long as the market is up or holding, but if the market really did collapse or they let it collapse, I think you'd have, quote-unquote, blood in the streets in terms of the reaction. So right now, it's really a tenuous situation, Kenneth.
Mark, as a market strategist and a technical trader, does your analysis show that gold is in fact in a bull market, or are we just seeing an upwards correction in a long-term bear market like someone such as Harry Dent would tell us?
Well, Harry's made some interesting calls over the years. I don't want to dismiss anything as possible in the markets. The metals have been manipulated too. We have GATA. I don't know if you've ever interviewed Chris Powell or Bill Murphy over at GATA.org. I've been doing research for years about the manipulation of the gold and silver market and how the central banks are trying to suppress the value of gold and silver, because obviously a strong gold and silver market implies that the central bankers aren't doing their jobs, and the problem with the currencies, which we know anyways, is they're all devalued. So, that's always a risk that the central bankers, and we know this is a story with the COMEX, which I've written about for years. Basically, it's a fraudulent market because it's a paper market, and you can hit the bids and drive prices down. Whether there's actually gold and silver behind those contracts to make delivery is always in question, and a lot of the research says that's not the case. So to answer your question, depends how aggressive the central banks want to become to keep gold and silver from moving higher, and we'll just have to know as time marches on here. I'm more in the bull camp. I think we had a big correction over the last 4 or 5 years, and this is a nice bounce. I think you're going to have to get to the 1400, 1450 area in gold, and probably 25, 26 in silver to really start saying, hey, this is a new bull market. So I also think there could be some volatility here, perhaps a correction toward the end of the year. So I think we're overall up over the next 2-3 years, but I think it's going to be really choppy, Kenneth. And I am a trader on the long side, but I like to catch the breaks. That's sort of where I'm at.
Mark, what do you suppose will send gold higher? Will it be multiple Brexit-type shocks to the market? And I guess, how high do you ultimately suspect gold to go? Are you in the camp of, we could see gold at 10,000, 20,000, and, at a number that can't be priced in dollars? Or do you just see it kind of going up steadily in a more traditional fashion?
Well, like I said a moment ago, I'm a technician, and I sort of trade the numbers and to see whether as it unfolds here. So years ago I might have said to you 3,000, 5,000 was all possible, and frankly I was surprised when it stopped at 1922. back in November, 2007, and took the nosedive that it did. So I don't think I'm very good at telling you what that big ultimate number could be, or whether Harry Dent is right and we're going down to $600-700, which I've read and heard about. So we just have to watch the charts, and I think you have to watch the support and resistance levels, and you have to see whether the central bankers get involved or not. I mean, if I had to pick a number, I would say that 3,000 level is not a unfair one. But listen, you got a lot of road between now and that level, and you've got the highs back in 2007. You'd have to surpass. So I think we're just going to have to take it a day at a time here. I think you have to hold some gold and silver, though, as diversification. I think that's the key, and I'm big in keeping money out of the financial system as best I can. Whether you own physical real estate, whether you own gold and silver, whether you have collectibles, whether you invest offshore and own assets in other places other than the U.S. You have to do something. Cash is very important too, keeping a stockhold of cash around just in case something happens. So, I think you have to have something in the markets, obviously, and you just can't be totally out, but I think you have to be realistic. So gold and silver part and parcel to that. And at the moment, it appears that we're in an overall multi-year up cycle. It might have started, and, if we start breaking support levels, then it's all over. So I'm just going to give it the benefit of the doubt. My opinion about gold and silver here is, it's bullish according to my model that I put together this year. So I thought should overall zigzag higher, and seasonality says you generally hit a low, late June, early July, and you usually trend up until the end of the year or February. So I'd be more likely to give the upside the benefit of the doubt, particularly if you got a little shakeout. So I'm bullish for now, and to give you that ultimate target, Ken, is sort of difficult for me.
Sure. Mark, let's talk about your assessment on the stock market. Interestingly enough, and I've been bringing this up in some of my past interviews, the stock market hit new highs when Hillary Clinton got her pass from the FBI, and we know she's the establishment candidate. She receives millions and millions of dollars from Wall Street. And I want to ask you, do you suspect that the market will do better under a Hillary Clinton presidency, or will fundamentals in the economy cause a massive correction regardless of who is the president of the United States?
History says it really makes no difference who's president, and you can go back and do a lot of research on this. I mean, during Republican administrations, you've seen crashes. During Democrat administrations, you've seen crashes. What is really the party anyway? What does it really represent? Who really controls the market? These are really questions that you need to ask. And ultimately, it appears over the last century, it's Wall Street and the bankers that control the stock market. All began when the Federal Reserve was created in 1913. So for 100 years, we've got the bankers more or less in charge. And despite what Obama or Hillary says about egalitarianism and unequal social compensation and whatever, you still have the big Wall Street players backing them. The stories about the speeches that Hillary got paid for, or even Obama is involved very heavily. He's got Warren Buffett sitting next to him as his big supporter, which is ridiculous when you think about, he's trying to help the underprivileged or the low-income people, and he's got Warren Buffett standing next to him. So it's all big money, at the House, no matter who's there, whether it's Trump or whether it's Hillary. And, what I've learned over the years, though I have my own political views about who should be, elected, which I don't think we should touch on because I'll either be hated or loved during this interview. I think ultimately the market does what it's going to do. And you could say, it's going to be a bear market if Hillary gets in, or it's going to be a bear market if Trump gets in, and that's not necessarily the case. So it's, you just got to watch the numbers. I mean, I'm more in the camp that I think we're due for a correction. But generally, when you get an elected president, you tend to get a bit of a rally afterwards. So I think you'll have softness into the election, and then because of the uncertainty. And then once there's some, market doesn't like uncertainty, as you know. So once we have some certainty, I think the market would stage a year-end rally, and we'll just have to sort of take it from there. And whether we're going to start a bear market, let the tape tell us. So I'm more in the camp that we probably are headed for some type of bear cycle, but you gotta trade them and just follow the numbers. So I think having an opinion is dangerous. You know what I'm saying? When you're trading that market, I mean, are we looking to be forecasters? And I write a newsletter, and people love to hear forecast, and I put out my annual forecast model, but ultimately are we making money and following whatever trend is in place? A lot of people got hooked on this rally in crude oil, as you know, here the last few weeks, and looked to me like a bit of a bear bounce. Turned out to be right there, and you just have to sort of follow the numbers and see what they tell you. So that's sort of where I'm at. I think it doesn't make a difference who's in ultimately long term. I mean, you've seen all this through the century, but again, I think you got to watch the tape, Kenneth. You got to watch the numbers. That's really what it all comes down to. You get too caught up in the news. You get too caught up in I keep the volume off at CNBC. I mean, I don't listen to the stories. I watch the tape. I look at what the charts are telling you, the group action, the volume. Sometimes the news is important to a certain extent. You get to see, hear good news at the tops or bad news at the bottoms. I love it when they break stocks on bad news and they shake them out on some bad earnings report or bad analyst comments, and that immediately catches my attention. And that they're trying to shake the stock, and it's probably a buy, and in many occasions that is the case. Same thing on the buy side. They drive them up with good news, and then you find out that's a good opportunity to sell. So unfortunately, I've been doing this a long time. I mean, I come from a floor trading background back in the 1970s and 80s, and unfortunately we do have manipulated markets and rigged markets, whether it's on the government level or otherwise, and this whole business of companies buying back their shares to drive prices higher, or analysts lowballing earnings estimates, as you probably know, and suddenly they surprise the street and the stock goes up supposedly unexpectedly, when we really know that was what they were planning to accomplish. So all this shenanigans is really going on, and it's you just got to factor that into your trading.
Mark, you brought up the idea and the fact that we know that central banks have just allowed, the Fed has allowed banks to buy back their own shares, and this is obviously a stimulus for these banks, the ultra 1%, and it's an effort to keep this whole thing going. And I want to talk about interest rates, because interest rates is a large driver for kicking this can down the road. And do interest rates influence your decision making, the way you make your trades, and kind of what is the significance of what we're seeing with the Fed not being able to raise interest rates when they said they would? From December 2015, we were going to see 4 rate hikes from that point in 2016 here, and we're not seeing anything thus far, but just more can kicking and stimulus down the road. So just any thoughts on that?
Yeah, well, I've been writing for 2-3 years that they would not raise interest rates, and they could not raise interest rates because of what's going on. We have a world deflationary environment, and the economic numbers are doctored up here. Everything from the employment reports to GDP, in my opinion, basically they're all messed up numbers, and the real world out there, the real job situation, the real economy really wasn't what they were leading us to believe, and we all seem to fall into the trap of thinking things were better because the stock market was going up, but that was also, as I just implied, manipulation too, because of zero interest rates, and where people are going to put money. They were sort of, retirees were forced to look for yield, and they're buying stocks when they really shouldn't be. So all this story drove the market up, and the interest rates really there's no basis for the rates to go higher. And I've said that all along, and now we see the results. You've got to even have Yellen talking about the possibility of negative interest rates. She actually raised that in a hearing before Congress. She's not excited about doing it, but ultimately you could see negative rates in this country, as we're seeing starting to see around the world. And this nonsense about raising rates, that's what it is. I mean, I think it's a political push on the part of the banks, because, as you know, banks make more money if rates do go up. Their spread works better, so I think the banks might be pushing for it, but economically it doesn't make any sense. So, and I don't think they're going to do anything before the election. Otherwise they'd be accused of some political conspiracy of some kind, to hurt one of the candidates or help one of the candidates. So I think if they're going to do anything, it'd be after the election. But it doesn't mean if they raise them, Kenneth, they won't reverse policy 3 or 6 months down the road. And I've been writing for a couple of years that a QE4 is probably coming at some point because of what's really going on in the economy. So we just see the Mario Draghi doing what he's doing, and Japan doing what they're doing, and it's clear that they're all in cahoots. They're all talking to one another, and they're all trying to support the markets, and they're trying to keep rates relatively low, and like I say, Yellen could reverse herself too. So we'll see. Maybe things will change next year, but I'm still in the bullish bond market camp, lower interest rates camp for now.
Mark, again, thanks for coming on and sharing your insights and your research with us here at crushthestreet.com. We're always trying to make sense of, again, this collapse and just what's going on, and of course being ahead and being able to prosper in this current environment. So if people want to learn more about what you do, give us some closing thoughts here, and also just tell us a little bit about what they can find if they visit you at vrtrader.com.
All right, well, just general statement here, sell may go away, works more than it doesn't. We're in that choppy period into the fall, so I would advise people that, we got a lot of volatility here in the summer and into the fall, and they're best probably staying out of the markets unless they're really traders and they're going to try to catch some of the swings. We saw indexes go to new highs here, which I think was a bit of a bull trap, but time will we'll find out if that's true or not. But I think, they should wait till the fall and see where the market is and make a decision there, also factoring in the election and so forth. And maybe there will be a nice buying opportunity. As far as vrtrader.com, we have a lot of products. I've been doing this a long time. If you go to VR Trader, you'll see that we have an annual forecast model. It's based on cycle work we put out at the beginning of the year. That's a one-time report. We have daily reports called VR Trader Silver and VR Trader Platinum. Silver is general market commentary, and Platinum includes that commentary plus individual recommendations. We have a gold letter, which covers the precious metals, natural resources. That comes out weekly. You'll see that at VR Trader. And then about a year ago, I created this new product, sort of fun, called the Vice Letter. And I did that because I was trying to cover the new cannabis stocks, which many may or may not know. There's several hundred penny cannabis stocks out there, marijuana stocks, and most of them are garbage. But there are a few that are worth following, and there is a growing industry there, Ken. And so we cover other things in the Vice Letter too, besides the cannabis, alcohol, gaming, tobacco, and so forth. But there is definitely emphasis on that. So that's an interesting product for those who are following that industry. And that's VR Trader. And I do also, those of you, if it's not a conflict for you, I do host a weekly radio show on the Genesis Communication Network at gcnlive.com, Saturday mornings, 10 a.m. Eastern. So it's called Wall Street Raw, so tune in on that and you'll learn more about what we do as well.
Awesome, Mark. Well, hey, thanks again for coming on the show, and anyone who wants to learn more about Mark, please visit his website, you can check out his radio show, and take a look at his products here. Mark, thanks again for coming on the show with us here at crushthestreet.com.
Happy to do it often, Kenneth. Thanks for inviting me. Take care.